Hello, welcome to the European Open briefing for Tuesday, June the 6th. I'm Rafi Bajan, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So we have quite a bit of risk aversion this morning ahead of some big risk events this week. The dollar is currently at 7-month lows. There's the testimony coming up in Congress by James Comey, that's the former FBI director, who was sacked for allegedly not dropping the investigation into the ex-national security advisor Michael Flynn. So that has the potential to cause further headaches for President Trump. The Australian dollar has been seesawing a bit this morning. We had current account data for Australia, which sent the Aussie down, but then we had the RBA's monetary policy meeting where they maintained their upbeat view of the Australian economy, and that helped the Aussie bounce back higher. The pound is holding surprisingly resilient against the dollar. It's about $1.29, despite more polls showing narrowing lead for the Conservatives ahead of Thursday general election in the UK. While the euro, of course, we've got the ECB meeting coming up on Thursday as well. So the euro is currently being supported near 7-month highs on expectations that the ECB will sound less dovish at this month's meeting. But overall, the risk aversion that is currently dominating the markets, the gold is near 7-week highs, while oil is near 4-week highs amid those reports or those fears rather that the current OPEC deal may not hold if the diplomatic row between Qatar and 4 other Arab states escalates. But let's start with the dollar. We can see here in the chart the dollar yen in yellow has dropped below the 110 level. It's at 6-week low. Currently the dollar index hits a fresh 7-month low earlier today of 96.53. On Friday, of course, we had that disappointing jobs report, which although it wasn't too bad, but it wasn't strong enough to maintain the view that the Fed will be able to raise rates for a third time after June. We also had yesterday the ISM non-manufacturing PMI, which was also a bit on the soft side. So all of this has put into doubt about whether a third rate hike will be warranted later this year. Although for June itself, most analysts still expect a rate increase at the FOMC meeting next week. But of course, we also have the former FBI director James Comey testifying before the Senate Intelligence Committee because he's being questioned about the reasons why President Trump sacked him, and more specifically about whether or not Trump did ask him to drop the investigation into the ex-national security advisor Michael Flynn, who was forced to resign early this year. Let's move on to the Australian dollar now, because we can see that the Aussie has been steadily climbing up since late last week. We had current account data out of Australia earlier today, which showed the deficit narrowing to the smallest since 2001 in the first quarter. Although there was some disappointment that the data didn't show a surplus, so that's why we saw a dip in the Aussie before bouncing higher again after the RBA meeting. The RBA said that despite the first quarter slowdown, it's still expected for growth to increase gradually over the next couple of years to a little above 3%. So of course we have the GDP numbers for the first quarter out tomorrow. They're expected to show growth coming at 0.2%. There was some relief yesterday after the business inventory data came in much stronger than expected, although it's still likely that weaker exports will weigh on first quarter growth, and that's why we're seeing, even after the RBA's statement earlier today where they held rates at 1.5%, we saw the Aussie dropping back before bouncing higher again. So we had quite a bit of volatility for the Aussie, although it's currently slightly up on the day at around 0.7484. Moving on to the pound now, because of course Thursday we have the UK general election. One poll, a new poll, is showing the Conservatives just 1 point ahead of Labour, although most polls are putting the Conservatives 7 points ahead of Labour, and that should be enough to give them a majority in Parliament. The pound is currently at trading just about 1.2910. Early today it did hit a 1 week high before easing back. Yesterday we did have worse than expected services PMI out of the UK, but there was little reaction today as the election is pretty much dominating traders' minds this week. So we'll most likely see further volatility until the election outcomes are out late on Thursday, early Friday morning. And also coming up on Thursday, we've got the ECB monetary policy meeting. It's widely expected that the ECB will sound less dovish. They will probably no longer be saying that the risks to the Eurozone growth are to the downside, or they might say it's maybe just slightly way to the downside, the risks to Eurozone growth and inflation. But also they may also remove the pledge to ease policy further if the situation gets worse, given that fact that the outlook for the Eurozone economy is vastly improving. So it no longer makes sense for the ECB to keep saying that they will ease further if necessary, given that the economic environment has changed dramatically since the start of this year, and the euro is being supported because of that near 7 months high as it touched on Friday, currently at around 1.1250. Looking at commodities, gold is benefiting from we've got political uncertainty, both the US and the UK elections, and then the ECB rate hike, and of course the diminishing expectations of a third Fed rate hike in 2017. So all of that has pushed gold to near 7-week highs. It hit a 7-week high, $1,289.67 an ounce a short while ago. Oil, on the other hand, is rather muted, although it is a little bit volatile. Apart from rising US production, we've got another factor weighing on oil prices now. It's the fact that, there's a 4 Arab states, including Saudi Arabia, they've cut diplomatic ties with Qatar. So that's why that's led to some fears that the OPEC deal may collapse, because if Qatar pulls out, it may weaken the agreement. But that's just speculation at the moment. We haven't seen too much of a reaction in oil prices. It's currently slightly down on the day. At US crude is currently trading around $47.28 an ounce. Looking at today's economic calendar, we've got Eurozone retail sales and Centix index coming up shortly. We're also going to have the global dairy auction. We saw the kiwi hitting a 3 months high earlier today, so another increase in milk auctions could boost the New Zealand dollar. But US session is going to be quiet. We're just going to have the JOLTS job openings, and in Canada we're going to have the IV PMI. That's it from me. Thank you very much for watching, and have a great day.